Hello, I'm Radical Liberation, self-declared King of the Moon, coming at you from St. Louis, Missouri, United States. And what a great week to be doing our Econ mini show, which I guess you could say, as I think about it, the Econ minis probably tend to be a little more related to current events. And we have some events that are current, don't we? And we have Mad Mercenary with us from, with his icon that subtly suggests Australia there.
Hello, yes. The only reason the icon is different is because I've had issues this morning and my computer is down. So I'm doing this from my phone. So we'll see how this works.
All right. So, okay, well, let's get right to it. The hot topic. And yeah, I called it the fun because it seems like somebody's having fun. Well, I'm sure there'll be tears later, but let's not worry about that. There's always tears. For this week, it seems like there's a lot of memeing going on, and the memeing has gone beyond that into affecting some things on Wall Street. Yeah, we like the stock. That's the big. We like the stock, or we like the stocks.
It's a nice distraction, but it's interesting how the meme has gone beyond the internet and into the real world. That's the interesting part about this. But apart from that, it's just a nice distraction, and it's fun to talk about. So let's talk about it.
Yeah, well, I think there'll be something more useful to say here. But first, let's just cover the basics. First of all, hopefully I have it handy. No, I don't. Great. I did want to point out, if you really want to get into more detail and analysis on this incident, then Academic Agent, incorporating a video by Keith Woods, who actually did some good analysis on it. Academic Agent has a video that I recommend, and I put it in the chat, and he really gets into some of the mechanics and some ways to evaluate it and all that sort of stuff. I'm going to come at it from a slightly different angle, but I do want to cover the basics just so people aren't lost. So what's been going on? There's a subreddit called WallStreetBets, where I guess the theme of it is that they kind of go for it and do an all or nothing on some investment. And they noticed that hedge funds were shorting, I'll explain that in a moment, we're shorting GameStop, the GameStop stock, which is, oh man, I've been seeing the ticker symbol all over the place. What's the ticker symbol? It's been in all the memes, and I've already forgotten it. Sorry, my head's not good for ticker symbols. Okay, someone hopefully will share. But anyway, the GameStop stock, they saw that some hedge fund guys were heavily shorting GME. Thank you. Shorting GME, and so they decided to screw them over. So how is this even possible? Let's slow down and talk about long versus short. I'm not an expert in this. I'm coming up to speed to some degree, just like you guys are. Okay, so long, taking a long position versus as opposed to a short position is sort of what we're used to, what seems intuitive and easy to understand. That is, you buy some Apple stock in the hope that the stock will go up. The idea being that you buy it at a certain price, and eventually it goes up, and at some point you sell it, and you profit between what you bought it for versus what you sold it for, right? So line go up, you're happy. Well, there is another side though, right? Sometimes the line goes down, and the market has a way to deal with that as well, and it's called taking a short position. That is, rather than betting on the stock going up, you're betting on it going down. Well, how in the world can you make money in that way? Evidently, there's a number of complicated ways, but here's the simplest way to understand. You borrow the stock, you borrow someone else's stock. This is something a service that brokers provide, I guess. And I think the people loaning the stock have to agree to it, or maybe they sign an agreement. Yes, if this broker is dealing with my stocks, they may loan them. I don't know. Anyway, the short seller borrows the stock and immediately sells it. Okay, so let's say the stock right now is at $30 and the short seller thinks it's going to go down. he sells it at 30, and then he waits for it to go down, and once it goes down, he buys it. Let's say it goes down to 10. Let's say he's right, and it goes down to $10 a share, and now he buys up $10 the stock at $10 a share, returns it to the one who borrowed it, so they don't have the exact same stock. Anyway, don't worry about that. They had 5 shares, and now they have 5 shares again, except the short seller was able to buy it at 30, sell it at 10, and profit by the difference. Okay, so that's the essential idea there.
If I can just jump in.
Yep.
With short, essentially what you're doing is between you and the broker, you're hoping that the price goes down. But the broker is hoping, so they at the predetermined date in the future when the broker has to buy the stock back, the broker is hoping that the price goes up. Because if the price goes up, you don't make money, the broker makes money. So for example, let's say it goes up by $10 instead of going down to $10. So it goes to 40 instead of 10. The broker the seller sells the stock back to you, and the broker keeps the difference between the new price, because you have to pay him the new price, right? So it's a bet. It's a bet between the broker and the short seller.
Short seller.
This is why shorting is highly risky. It is very risky in comparison to normal, buy low, sell high sort of tactics.
Right. Well, there's a couple reasons why it's risky, right? One is that you can, at any time they could say, "Hey, I need that stock back." So you're betting that you'll be able to hold on to the stock long enough for the hoped for downward movement. So that's part of the reason it's risky. The other is, of course, that the stock might go up. And the thing about holding a long position is that there's a bottom to how much you can lose, right? If I buy a stock at $30, let's say I buy 1 share at $30, how much can I lose? $30. But if I do the short selling thing, how much can I lose? It goes the other way. Instead of 30 to 0, 30 to infinity, in theory, right? However high the stock price goes, you now need to buy the stock at that price to return it to whoever you borrowed it from, right? And so the upside is finite. The downside for short selling is infinite. And that's essentially the property of short selling that the guys on WallStreetBets are exploiting. So they are taking a risk by what they're doing, but they kind of know what it is. And I've seen some videos and stuff, and people are basically saying, yeah, I know I might lose this money, and that would be okay, right? But they know it's whatever they are putting into it, that's how much they can lose. The short sellers, on the other hand, can essentially have infinite losses. And that's what's happening. And that's why you're seeing these massive figures of 23 billion. I've seen bigger figures, 23 billion realized already, but they think it's going to be 91 billion for sure. I don't know. You were going to say, Medmerk?
Yeah, this is this is something. Look, for those people who still don't understand, and I don't blame you, it's complicated as hell. Just understand that this complicated mechanism, the workings in and out, is just to achieve the essential effect is to achieve the opposite of what we would normally consider a long position. So that's the essential effect. So don't worry about, if you still don't get it, don't worry about the details, worry about it later. Go look it up on your own time. But the essential effect is that you're achieving the opposite of a long position, and you don't want the stock to go up in price, you want the stock to go down. That's essentially what we're talking about here.
We've got some, go ahead.
And with the short, whereas with a long position, your risk is limited to a certain degree. With a short position, your risk is infinite. That's
right. Now there's a footnote on that, which one of our folks in the chat has explained, but I will come back around to that. But let's finish the sort of the main story here. So that gives you the idea of, hopefully, of short selling, or taking a short position. and the risks of it. So what have the Wall Street Bets guys done? They saw that people, some hedge funds, and I gather that hedge funds are the ones who tend to take a lot of short positions. I'm not an expert on this, but
hedge funds. So hedge funds are investors and pool their money together, and a hedge fund takes that money and invests it for them into the market, into risky. Hedge funds are considered more risky. They usually are, they're day traders. They're going out there. They're making deals. They're trying to get as much profit as possible for their clients. And hedge funds usually have several $1 billion behind them individually. Some of the large ones have many, many billions of dollars. So we're talking like $10 billion, $11 billion. These are very large firms. So hedge funds are titans of financial institutions. Let's put it that way.
Right. And we'll get to this maybe later, but they also seem to be donors to politicians sometimes, shall we say. What did the So what did the Wall Street Bets guys do? They noticed that I guess you can just see this. I don't know what their visibility is, but they noticed that there were some pretty strong short positions on the GameStop stock. And their motivation is a little bit unclear to me, but basically they decided to start buying it and driving the stock up in a coordinated way. Now, I don't think any of these are big money people necessarily. It's a lot of smaller investors, right? These are not institutional investors, that's for sure. They're what are called retail investors. But you combine, I think there's 2 million people in Wall Street Bets, something like that. You combine a lot of small investors and you can start throwing your weight around, and that's exactly what they did. So they drive the stock up. Actually, this is where to bring in Orange's, I'm going to say Orange. I don't know how it's supposed to be pronounced. Orange's insights. Okay, so, a couple things here. So first of all, a naked short is what we were describing. That is an unlimited risk of loss. But then as Orange says, there's the option to have a stop with the broker. So, and I lost my place. Okay, there we go. And I thought there was more on this. I'm missing it. Yeah, there we go. So after a certain price, high price, the broker sells automatically. So what does this mean? The people who did this knew what they were doing. Okay, the Wall Street Bets guys. They knew that if they drove the price up enough, it would start hitting those stop points, and the broker would sell, and then the sale would in turn hopefully feed into the stock price going up. So they'd use their own money to buy GameStop up. It would drive the price up to a certain point. Then they'd start getting what did we learn from the setting fires last year and the riots? Accelerant. They'd get some accelerant when they started hitting those stop points, right? Each time they hit one of those stop points, the broker would automatically sell a bunch of stuff off. That would drive the price up more, put more money in, drive it to the next stop point, accelerant, so on and so forth. So what did it go from? It's up in the 200s and it was down at 20 or something, right? I'm forgetting the movement, but it was pretty dramatic for the stock.
It's basically, think about, all right, let me put it in practical terms for everyone. Think about a meme. I mean, just like a normal meme, like Pepe or whatever. A meme usually starts its life out very small, and it grows, snowballs over time, and grows traction. More and more people use it, right? Now think about what a hedge fund does. Now, if a hedge fund, especially a major hedge fund, puts a short on a position, meaning they short a company. Sorry, I'm using lingo there. They put a short on a position. They short a company. They short a certain stock or whatever, and then they publicize that. Other people start to wake up. Oh, wow. Why are they shorting that? Should I be shorting that? Let's have a look at that. Yeah, I think I'll short that. And then so it starts to build up and build up and build up till you have something like a GameStop situation where there's a ton of shorts on that position. And then someone on Reddit does another snowball effect where they say, hey, let's make the price rise and screw over a lot of these hedge funds. And so it builds up traction, it builds up traction, it builds up traction until on Reddit, everyone's buying GameStop, and it goes to, I don't know what the price is at the moment. I think Redlib said 200, and now all of these short positions who thought they were smart are now getting screwed over because they're having to pay the broker fee, and they're having to sell. Now, interestingly, now we know we've talked about bubbles before in this show, right? So we've talked about the Fed increasing the money supply, and we've talked about all these sorts of things. What has this Reddit group done? Well, they've artificially inflated the price of the GameStop stock. So, if anyone has the money out there, when the fad dies down and everyone starts to sell their position because they see GameStop is at a high and they want to make a bit of money, right now might be the time to actually short, because the price will go down, because these people on Reddit will see it's at an all-time high and they've done their job and they screwed over these hedge funds and they sell their position.
Right.
So if anyone has the money out there to do it, and yes, I do take full credit for this idea, and throw us a couple bucks, but because I definitely do not have the money to do this. But if anyone has some money out there, now might be the time to short the stock and wait for it to go down, and you could make even more money than what the hedge funds would have done when they shorted it at 20. If you shorted it at 200, because the price is inflated by all the people who tried to screw over the hedge funds.
Right. We know what's going on. We know the price is not going to stay at 270 or whatever, right? There's just no way.
There's no way. And in a month's time, it could be back down to 20. So right now could be the opportune moment to short the stock and wait for the price to fall. Again, if you do that and you win, throw us a couple bucks.
Someone suggested in the chat that Melvin Capital, that's one of the big hedge funds that seems to be taking a beating here, that they were essentially had naked shorts, no stop loss on it.
Oh,
and one of the things I'm seeing says it's supposedly illegal, but evidently they kind of had something. Anyway, they exposed themselves pretty bad, and they really got bit. Is what's happening here. Okay,
I don't think in the risk management plan of making this short, I don't think anyone was considering a bunch of people on Reddit getting around and buying and inflating the stock price to where you're making huge losses.
Right.
I don't think anyone put it. Maybe a financial crisis was in there somewhere, but not that. It's a black swan event.
Yeah. Yeah, exactly. No wonder they're feeling annoyed. It's like, hey, what are all these kids doing in here? Okay, so some information. Aranje says they shorted it over 100%, 150%, I think, on Melvin's end. They defeated being a hedge. Because a hedge is the implication of being a hedge is that it's a protection from risk, but they seem to have exposed themselves to so much risk that they're losing their company.
Usually the reason people invest in a hedge fund is because they don't understand the system well enough to do it themselves and become a day trader. So again, they put their money with a hedge fund, and the hedge fund does it for them.
Right.
It's meant to minimize risk. It hasn't worked out.
Okay, so anyway, like I said, check out Academic Agent's video. I did put that link in there, did I? I don't remember if I did. Here, I'll put it again.
I can't check because every time I try and look at chat, my phone likes to just die and exit the call. So
no.
We're not
Stay
doing
on
that.
the call. That's fine. Okay, so I shared it again. Academic Agent has a lengthier analysis, and even talking about the two narratives, right? These guys are pirates. They're great guys. They're sticking it to the man, and the other narrative is this is market manipulation, and somebody's got to step in and stop this sort of thing. And he presents those two narratives and then gives some reasons to have a more nuanced view of what's going on. So I really recommend it to you. But I actually want to go in a slightly different direction and share an article.
If they claim this is market manipulation, I just call them hypocrites.
Well, that's what a lot of people are saying already, yeah. So Mises.org to the rescue as usual. Clown World Finance by Christopher Hansen. I had shared an article with him recently, and in corresponding with him on Twitter, I realized that I had met Christopher recently. And as usual, once I saw his face on his Twitter account, it rang a bell, and I had forgotten his name because I'm better at faces than names. So I actually know Christopher, so I wanted to acknowledge that. It was a real pleasure getting to meet him at a Mises Institute conference. So he summarizes the story, but what I want to get to, though, yeah, I mean, this is now old, right? Because this is published yesterday, but and already more has happened, including NASDAQ stopped trading on GameStop, I think. It says Melvin Capital suffered huge losses up to 30%, had to be saved by an infusion of 2.75 billion, not from the government, as I understand it, but from like other firms. I guess they have deals with each other. I don't know. But this is the part I wanted to highlight, which is to say, like, what's going on here? Is this normal? Is this healthy? And he says, no. He says, in a sane market where market fundamentals actually determine prices, this would not have happened. Now, he does think short selling is legit. I saw people in the chat asking about that. He does think it's legit. It ought to be legal. But in a healthy...
Just quickly on that point, sorry, not to interrupt, but I have seen that argument brought up. Well, short selling should be illegal, and I saw this on actually a few prominent streamers online. Short selling is really, really, really important. It's a really, really important mechanism to the market in order to capitalize on someone's loss and to turn, think about jiu-jitsu, right? You're not trying to stop someone's punch straight away in jiu-jitsu. You're trying to use that energy and to move it into something else. Shorts is kind of like that, in my mind at least. Someone else's loss can still be moved into more profit and for more productivity. Right? So short selling is really, really important. The process of getting to the effect of short selling is complicated as hell. But once you understand it, and once you understand the outcome, which is basically just to have the opposite effect of a long position, you see it's really, really, really important, like super important, to have shorts. So please, people, do not take this as endorsement as saying, oh, we should ban short selling. No, really, really important to the market. Want to make that really clear.
Right. Yeah, I agree, and I think it would be trying to ban it would be along the lines of trying to ban losses or something, right? But we'll just make it illegal for anyone to lose, and then it'll just be profit all the way. Well, it's not going to work out, right?
And we can just print more money, and now that we're all billionaires because we declared leaves our money.
Exactly right. Okay, so as he says, when market fundamentals are actually determining prices, short selling would simply be a way of quickly and efficiently determining the market price of stocks. And there'd be no special profit to be had from this practice beyond the arbitrage gain when they're correct, And similarly, he says on the other side of it, so he's saying that the short sellers being in such a crazy position, he thinks is artificial. But similarly, the investors angry at the short sellers could not have driven stock prices sky high in defiance of reality. Both practices are only possible in a market flooded with ever-increasing amounts of new money freshly printed by the Federal Reserve. So he is seeing what happened this week as a symptom of a deeper problem. It's the kind of craziness that I remember hearing about, I remember reading about in regards to the 1920s, right?
Yep.
Where, stocks are going up, and people are just doing weird stuff. They're quitting their job, like they're not being productive anymore, right? They're stopping actually being productive, and they're just playing the stock market or something like that, right? Well, this is the kind of crazy behavior you get when you have the government doing artificial things with the market. Go ahead, Medmer.
So a basic rule of thumb, and it's very, very rough. So don't take this as gospel. But a basic rule of thumb in history is to look at and say times of extravagance, and I mean extravagance, not eras of growth or anything. I mean like building useless stuff for the sake of building stuff. Times of extravagance is like the prelude to hard times.
Yeah,
because
right.
you start to be building useless stuff, start to do useless stuff for the sake of doing stuff. You know something is fundamentally wrong with the logic. And if you're, I said at the beginning of this, it's a fun little sideshow, but we have to remember the bigger picture here is that the Fed manipulates the market, the whole market, not just a single stock, the whole market, every single day. And we're going to come around to this because our next point is coming around to this. But this is not something that should be seen as it's funny. I'm not going to lie, it's funny. I like it, but it's not a sign of anything good.
Right. Yeah. But I think it might be fair to say that you see the WallStreetBets guys exploiting a system that usually it seems like the elites exploit to our detriment, right?
Right, and as soon as they exploited that system and made some money and made those other guys a loss, what do you see? Well, we need to regulate it.
We need to stop this game. Yeah. Now it needs to stop. Right.
Now, we were able to do it the hedge funds were able to do it for decades, but as soon as you act as a group, a mass, and one might say parallel to the real system, you gotta shut that down. Shut it down. Go on, big daddy government, step in.
Okay, so let's look at a little more from Christopher's article, his analysis. So he says, for decades, the central banks have had one mission: interest rates cannot ever be allowed to rise, and everything must be done to prevent even the mildest of corrections in financial markets. So, I was just joking, so to speak, about banning loss. Well, that's what he just described there, isn't it? It's we're going to keep interest rates low, and we're not going to allow, which induces bubble, right? And we're going to try everything we can to avoid any correction of that bubble or, widespread losses. He says after the financial crisis of 2008, they had to come out into the open. Interest rates were forced lower and lower, and markets were flooded with a tsunami of credit. Stocks and bonds reached all-time highs year after year. And more wacky theories from so-called economists why this was great instead of insane. But he says, what's the result? Financial markets completely divorced from reality. And their only purpose seems to be securing cheap funding for the U.S. government and enormous earnings for the financial elites. Boy, let's just pause on that for just a moment. The only purpose of financial markets seems to be cheap funding for the U.S. government and enormous earnings for the financial elites. There's a lot to think about right there. So then he says, they did the handouts, the stimulus checks, right, using the central bank. And this should have helped, but with the economy shut down, there's no place to spend the money. So he saved and invested his money. But we still get inflation. And his point is the government has done, I think we've discussed this a little bit, the government has done games with the official statistics about inflation, where they will use what's the consumer price index, right, Medmerk? That's the one where they will take things out of the basket because it's making the inflation, and it makes it look bad, yeah. And so they'll just change it, and they'll just take something out of it,
So for people to understand CPI, consumer price index, CPI is you have a range of goods. So you would have such as milk or pasta or whatever. You have a huge range of goods in that normal people buy every day, and then you have You put this in a basket, and you see if the prices of these everyday goods rises or falls over time, and then this is how you measure real inflation. So basically, if you increase the money supply in a very basic sense by 3%, and over time the uh, the basket rises in price 3%, you can say, well, because we increased the money supply by 3%, inflation rose by 3%. What we're talking about is that what possibly is happening, and I don't want to get I don't want to disappear, so I'll just say possibly. What is possibly happening is that the government is removing certain parts, like certain items from the basket that we use for CPI, to keep the inflation, the official inflation figure, low. And there is some validity to this, because if you have a look at some CPI, a private CPI index, which many companies run, something like Peter Schiff's from Euro Pacific Capital, his CPI is much higher in the rate of price change than the official government's one. So the government might be doing some manipulation of the statistics there in order to make it look like inflation is not as bad as it really is.
Yeah, that's quite interesting. I have to confess, I knew that we had alternative measures of the money supply that have been developed by, I think, first Rothbard, and then Joe Salerno has modified it a bit. So we have like the Austrian money supply, and it'll show you a different picture than the official government stats, right? I did not know that we had an alternative consumer price index. That is kind of cool. Okay, so let's finish this up. Right. So the point is the inflation comes out somewhere, right? And he suggests, now this is interesting, that stocks, bonds, Bitcoin, and now GameStop have gone up really high. And he says, because that's you've got stuff, all this money they've been printing sloshing around, and it's got to go somewhere. Okay, so
I think Bitcoin is a little bit different in the sense that the fundamentals of what it is are different to a traditional stock or bond. But the essential point that he's making there is that, and this is what we call, and I'm sure Red Lib will have a lot to say about this, a Cantillon effect. So basically what this is that when someone prints money, the person who receives that newly printed money gets the most benefit of it. So the person who first receives that newly printed money gets the most benefit from it, because it's not out there in the market yet, and not everyone knows that there's new money. So you can buy items or stocks or bonds at the same price as it is right now, but you know that inflation is on the way. So the prices has to rise. With bonds, the yields rise and the price goes down, but we won't worry about that. So basically what you're doing is the person who gets the money first gets the most benefit, and then it goes down the line until the person who gets the money last has the least benefit from that newly printed money, because it's already in the system. And everyone has already accounted for this new influx of money. And so you get the least benefit from it. And in this case, the person who gets it last is the real economy, is Main Street. Because it goes to financial assets first, inflating the price, and them getting the most benefit from it, and then it filters through until it gets to the real economy. And when it gets to the real economy, well, everything's already gone up in price, and well, you just lucked out. So this is what we call a Cantillon effect, and I would love, please, people, look up The Economist. Was it English and French, or was it Scottish and French?
No, Irish, and he was Irish, but he operated in France. So his book was actually written in French.
Right. He did immense damage to the French economy, and basically he set the path for France to go down into a revolution.
Well,
because
that's a whole other story. Yeah,
yeah, it is. But
he saw what was a bubble, what was happening with the bubble, and he just sort of took advantage of it because he understood how the economy worked. But anyway,
yeah.
you'd think economists would all be rich because they understand how the economy works. That's actually rare. Okay, so I just want to read the payoff paragraph here at the end of Christopher's article, which reminds me I have not shared that article link, which I will. Anyway, he says, as Zero Hedge remarked on Twitter, what is remarkable is how many people are surprised by what is going on in the market. You throw $20 trillion of stimulus at it. You nationalize the bond market. You break all links between price and fundamentals. What do you think happens? And then Christopher goes on, indeed, it would be wholly fitting in clown world if the great stock market crash of 2021 were begun by day trading teenagers flush with helicopter money, thanks Uncle Milty, and with nothing else to do, forming a mob on Reddit in order to break a hedge fund. So, yeah, he says, well, could this precipitate, the whole house of cards falling down? It's possible. Anyway, I'm actually wanting to quickly break for super chats because some of them were directly relevant to this story, and then we'll go on to some other things we want to cover.
Okay, sounds good to me. Let's go.
Yeah, first of all, Chris Primer said it would be a shame if WallStreetBets entered the gold market.
Don't give them any ideas. Stop.
Yeah, right. And then I think I can put the next ones on screen. Yay. Okay, all right, says my homeschooled kids and I bought 2 shares last week, being okay to lose them. That's the way to do it, right? Don't do something that will leave you destitute, right? They're like, hey, let's just have some fun. Let's buy 2 shares. If we lose the money, it's okay. Now my kids are asking, how can Robinhood lock us out? No normies in this. Now, when you said Robinhood lock us out, isn't there, I think the issue is that, actually, I don't totally know what that means, but I think Robinhood is what they're calling, it's the people who are buying the stock, the WallStreetBets guys, or something like that. And by lock us out, they had turned their community private, I think.
I'm not sure that's true. I think Robinhood is actually a trading company that you use to trade. And I think what he's referring to is that I've read somewhere that if there was a ban on trading GameStop shares for a while, and so Robinhood may have locked them out of their shares. And if that's the case, you need to sue the shit out of them. Not legal advice, right. But I would be looking at your contract.
Yeah, okay, I see it here. I'm just looking for the date on this article. It says Robinhood, come on, there's no date on a news article. January 28th. Okay, this is from this morning. Robinhood restricts trading in GameStop and other names involved in the frenzy. Yeah, so yeah. So what? You just have to sit there and take the loss even though you were ready to sell? I'm not sure.
So again, the system protects its own, and these hedge funds have made a loss, and they've made a huge stir about it and asked what the hell's going on. And so in order to keep the relations, because remember, financial markets is also about relations with people and who you buy and sell from. In order to keep those good relations, people, look the other way and stop the trade of certain stocks, and no, it's all right, we got your back. We'll keep the bubble until you recover. Stuff like that, it's incestuous. It's not a free market because there's manipulation of it.
Right, exactly. Okay, this gives me an opportunity to make an announcement, but first let's read the super chat from Mickey the Fourth. I swear this is the best practical joke ever made, and it was organic and only loosely coordinated effort of millions of people at once. Yeah, it is. It does seem funny. Well, this reminds me, Mickey the Fourth had made an offer, which we're going to take up, to be a guest on the show. We're going to do that next week. So 1 week from today, our larger topic will be on the Czech Republic. Why would you want to know about the Czech Republic? Well, the Czech Republic is, or Czechia, it's also called, is one of these nations that was behind the Iron Curtain. And so what he's going to tell us about, which is I'm very eager to learn, is what has happened since the end of communism. What's happened economically, what's happened politically. And it's a pretty interesting story. He's given us enough to intrigue us. So we'll be learning about that. And we'll also be giving a hint about some upcoming, how shall I put it, history of the Austrian school that almost no one knows, that Mickey IV knows about and is going to be sharing more broadly. But you may hear it first on our show. You probably will. So look forward to that next week. Okay, so Hunger says, just bought my 2 shares today. Might be too late, but you only live once. Spending that stimulus money out of spite. Morning Dawn says, we like live streams and the stock. The we like the stock thing is hilarious. Now, unfortunately, with StreamYard, I don't know how to show this, but Ratface has sent 2 super stickers. You can see them in the chat. And it's a star and a smiley face with $signs, so that's fun. And then there was another one. Yeah, here we go. Mickey IV again. Yeah, Robinhood is a trading app. They disabled only buying, allowed only selling. What? Artificially pushing against the WallStreetBets guys? No. They didn't just stop trading altogether. They only allowed trading on one side. That can't be legal, Mad Merc. No way. Come on.
Sorry, I had a connection failure, so you're gonna have to repeat everything you just said.
Yeah. So Miki is saying that what happened is that Robinhood's a trading app. They disabled only buying and allowed only selling. That cannot be legal. No way.
I'm telling you, I'm saying, guys, if you're using Robinhood, look at your contract, and after you're done with your contract, look about moving away from Robinhood. That's all I'm saying. Because if they're willing to do this on one instance, then they're willing to do it on others.
And that's pretty frightening because sometimes well, anyway, to restrict you in that way. Here's an interesting comment, and then I'll come back to what Miki Poplub says. Robinhood is invested in the parent company of Melvin also. Whoa. Okay. So listen to this. In this story, Robinhood restricts trading in GameSpot from CNBC. One of the key points is, in some cases, investors would only be able to sell their positions and not open new ones. So they're literally, trying to push in one direction. What? I don't know if it's legal, but it's certainly crazy. Okay, so let's see. I think I caught up on super chats. Awesome. Thank you for those. We're going to cover a few other things.
But first, if you think that this system is corrupt, and it is, I just want to say there are certain people out there who are working on alternatives. I won't say any more. I've had a few things come my way. If anything really does develop, I'll keep you posted, but this could be interesting.
Here we go again, showing my private chats. Hopefully nothing critical this time. Twitter opens up your DMs every time you open a window. It bit me last time we did Econ Minis. Okay, I think I got it right this time. Wow. Okay, so next topic. Daniel Lacal, who's featured on Mises.org, seems to be a friend of the Institute. And I've got to learn how to pronounce his name correctly, that last name. He had an interesting tweet. I'll just read it, and then Matt Merck might have some comments. Every time you read that the Eurozone problem is that the European Central Bank is not as aggressive as the Fed, a kitten dies. He says the European Central Bank balance sheet is 62% of the Euro area GDP, right? So you've got you add up all the countries that are in, I guess, the Eurozone, I assume is what he's referring to by Euro area. You add up all the countries in the Eurozone, and you compare the balance sheet of the European Central Bank to the GDP of those countries, it's 62%. The Fed balance sheet is only 35% of US GDP. Save the kittens, he says. And then he has a picture. Let's see if I can make that bigger for everybody. There we go. And here's the chart he shows. He's charting, EU against US balance sheets. So the white line on top is the European Central Bank, right? Am I getting this right? Yeah. White line on top is European Central Bank. US is relatively still terrible. I know, but relatively below that. So yeah, commentary, sir.
This is what happens. This is what happens. This is what happens when you have 20 something. How many nations are in the EU? Like, however many come together and try and form one currency, because you're not just dealing with one economy, as the Europeans like to say, but you're dealing with many, many separate economies that all need, in their eyes, stimulus to keep going. And so the order of magnitude of the amount of stimulus that you need in order to keep this hodgepodge of a thing, bureaucratic mess going is endless. I mean, we saw this with when Greece collapsed, right? How many times did they ask for a bailout fund, and how many bailout funds did they get? Italy at the moment, Spain when they collapsed, Ireland. You know, we're talking about this on a continental scale, and so I think this is really only the beginning of the money printing when it comes to Eurozone. And this highlights a good fact is that we talk about the Fed and we kind of get really focused on the U.S. sort of side of all this because, well, they are the global currency at the moment. But we really need to look at it and say, okay, which is worse? In pure policy, which is worse? The Eurozone or the Fed? The Chinese central bank or the Fed? The Japanese central bank or the Fed? And when you compare it all, well, the Fed is monstrous and destructive and horrible. Purely on policy terms, they're about average. Now they have a much greater effect than all the other banks, but you know, when it comes to money printing, they're about average, and there are certainly places in the world that are going to be much, much worse off, such as the Eurozone, such as China. So that's basically all I had to say on that issue because I feel bad for you Europeans, guys. Get ready for it. Because once the velocity of money starts to actually pick up, you know, you're going to have a ton of inflation.
Miki the Fourth says, don't forget about all the corruption with EU money. What's he referring to there?
Embezzlement, basically taking the bailout funds or stimulus and just embezzling it.
Oh, really?
Using it for means that wasn't intended for. So basically, you have an agreement with the central bank. Basically the Germans. You have an agreement with the Germans that you say, oh yeah, we'll use it for infrastructure spending or whatever, ignoring the real economic viability of infrastructure spending to boost the economy, but whatever. You say you're going to use it for infrastructure spending to build a road or whatever, and then you use it for, I don't know, let's say restoring your parliament's building, or giving it to certain companies in order to keep operating. You know, these sort of corrupt tactics.
Okay.
Or simply just stealing it and embezzling it and putting it in an offshore account.
Let's see. I think I'm making this too hard on myself. Let me share the whole screen, or not the application window, so I can just flip tabs because I've sort of got them lined up on what we want to cover. Infinite effect. Okay, yeah. So we missed talking about this because you had technical problems 2 weeks ago. So just want to touch on it briefly. I picked a random headline having to do with this. New Zealand urges Australia to show respect to China. I suspect this might have something to do with trade. Yeah, I see the word trade pretty quick as I scan down. But what is going on here? There's, trade negotiations that are active. Well, okay, what I did see is that there was some kind of agreement between China and Australia several years ago. But now Australia is feeling like China's kind of breaking the deal or something like that, right?
So basically, Australia has been. This is a bit of a been building up for a while. Fortunately from my perspective, but unfortunately for Australian industry. Um, Basically, we signed a free trade agreement with China, and we have a huge amount of our exports going to China. I mean, an absolute gargantuan amount, vastly disproportionate. And basically, the Chinese have been encroaching on the political scene in Australia. They've been using foreign agents and spies within the university system, within the political system, within the financial business sphere especially, in order to try and learn things about Australia, Australian secrets, manipulate the markets, manipulate the political situation here in order to be more favorable to China and Chinese investors and Chinese interests.
Mm-hmm.
And essentially, Australia has been increasingly standing up to this. So for example, any Chinese company is banned from participating in a 5G network in Australia. There are heavy restrictions on Chinese companies and Chinese-owned government-owned businesses buying property in Australia. There's talk about restricting Chinese businesses from being involved in infrastructure projects. Obviously, with the whole stimulus going on and infrastructure building going on, they don't want Chinese companies involved. And so this has been slowly ratcheting up because the Chinese are a legitimate threat. And basically, now coronavirus, it doesn't matter what you think about coronavirus and masks and all that sort of stuff, put that to the side. The Australian government basically called for a full investigation of Wuhan and said, what is going on here? Where did the virus come from? And we need an international investigation of it. After that happened, the Chinese, like a couple days later, put 80% tariffs on Australian abattoirs. So basically, if you don't know what an abattoir is where meat, cows, pigs, sheep, whatever, are slaughtered and the meat is processed. So there were 80% tariffs on that. And then these tariffs just grew to other industries. So the wine industry, medical, coal, iron ore, all these sorts of things got huge tariffs put on them. And this is the trade war that has started between Australia and China, because China does not want an investigation and would like to operate freely in Australia for their own interests, and Australia does not want that to happen, and they would like an investigation of the origins of the coronavirus. And so we're at this bit of an impasse between China being an asshole and Australia being not powerful enough to do anything, essentially. I mean, we could cut off their coal, that's one thing, but then who knows what that would cause. That could legitimately cause a war. But
wow. Okay, so we'll keep an eye on the situation there between Australia and China, who are neighbors. I mean, Australia is really not that close to China, right? But it's relatively speaking, Australia and China are in each other's neighborhood in a way that, say, the United States is not in the neighborhood with China or Australia. Geographically.
There's a large Chinese minority community within Australia, and they are very secluded, and they do not interact well with the wider community. They're very insular.
Huh.
And so the problem is that it's a breeding ground for Chinese spies and Chinese nationalists. So yeah, it's not a good situation we have here at the moment. It's going to be very interesting to see which way everything goes, because without the security guarantor of the United States backing up Australia, how does Australia stand up to bigger powers like China or emerging powers like India and Indonesia? And you might be wondering about why New Zealand is urging Australia to show respect. If you guys remember back to our Belt and Road episode with Semigog, New Zealand was one of the members of the Belt and Road Initiative. So, no wonder why they're trying to, urge Australia to be a bit more gentle with China, because they have financial. Yeah, they have financial interest to do that. Also, the Prime Minister of New Zealand is a open socialist. She was a socialist in her youth and
Right.
continues to reign as a socialist while she's in office. So,
Yep. Okay. Well, let's stop with that topic then and get into our final topic. Okay, so there's a fellow named George Selgen. I think that's how you pronounce his name, Selgin. And he is an Austrian economist. He's at odds with the Mises Institute sometimes because they disagree on fractional banking, I think. He thinks it's something that would happen in a truly free market, and Mises Institute tends to take the Rothbardian line that it'd be 100% reserve in a free market, and no one would really want to have, put their money in the bank and know that it's not really there as soon as they put it in there, right? Or there's very left. But anyway, I kind of, in a way, I thought, that's like drama. That seems negative. In the 19th century, Americans really argued about the, what was it called? Bank of the United States, which was created twice. Basically, it was early attempts to have a central bank. Gold and silver and the nature of money. These were live political issues that the man on the street had some grasp of. So in a way, when you get inside the Austrian school, you start seeing people arguing over stuff that actually really matters. It's just that we live in a time that doesn't realize these things matter. So it's kind of neat, actually, that they argue. Anyway, he introduced something to me that I didn't know about because he wrote a book on it, and I got to see George Selgen speak at the Mises Institute, despite the friction there. He spoke on his book called Good Money. And this is one of those coins, tokens, not sure what to call it, because what this is a token halfpenny issued by the Paris Mine Company of Anglesey in 1788. Anglesey being a large island, a large Welsh island off the coast of Wales. So notice that the Paris Mine Company is not the Royal Mint, right? One's usually issuing currency. What's going on here? Well, it wasn't just the Paris Mine Company. It was a lot of others. I meant to have a few more pictures queued up, but let me just pull this up real quick. Here we go. Here's issued. Oh, yeah. So this was issued for Mr. Gilbert Pidcock in the 1790s to advertise his exhibition of wild animals in the Strand. These Pidcock's tokens are very popular with collectors, and they have an array of curious animals on them, So this is great fun, but what in the world is going on here? These seem to be private coins. Well, they were. They were, and they were alongside a legal tender situation, where the government was issuing currency, and you were supposed to use the government's money. So what in the world happened? Well, what happened is that I'm going to go back to that first one if I can find it. Here we go. The Druid. This is called the Druid. Sometimes all of these were called Druids because this is one of the earliest coins. It has a Druid on the front. So what happened is that the government of Britain would not issue what the market needed. That is, I think the smallest note they would do was £5, which back in 1788, £5 was real money, right? I think probably I'd have to double check, but I bet that £5 would be more than a sort of low class laborer would make in a year, right? So this is a note that is not very helpful to the working man, £5. This is like the United States saying we won't issue any note below $100,000 note, right? To put it in current currency. Well, that's not going to help us in our day-to-day lives, getting paid, making transactions. So, so the government of Britain wouldn't issue the smaller denominations that were needed, or they just there was just way too few of them for an economy that, you know, they were having the Industrial Revolution at this time, and so you had people leaving the farm, or maybe they didn't need to, you know, they kind of bartered basically and didn't need to have money, to work in a factory where they would be paid in currency and then use that currency to buy what they needed. So the whole economy was shifting towards a need for smaller coins and notes, and the government wasn't doing anything about it. So some of these private companies, like the Paris Mine Company, they were like, hey, we're mining copper. Why don't we use this copper and make it into some coins and pay our people in these copper coins? And let's see, it doesn't say it here, but on some of the early coins, it would say, like, to get around the legal tender thing, it would say, they'd call them tokens. They're not coins, they're tokens. It's a token that represents, is exchangeable for like a legal copper coin, right? But in practice, what happened for quite a period of time is that these became widely used throughout Britain. You probably didn't know that a private currency was widely used for decades in Britain, did you? That's why you come to this show. So let's share a link here, or show you George Selgen's book, and share a link to it. Here we go. I thought I had that queued up, but I didn't. Folks should be seeing it now, right? Oh, I can't tell. Anyway, here we go. And I will try to share a link to this as well. So from 1775 to 1821, in 1821, laws were passed by the government of Britain to outlaw private currency, basically. And then another law later was passed because I guess it was still going on. But really, this was the heyday, 1775 to 1821, which is not a short amount of time, right? That's almost but not quite 50 years. Yeah, right. In 1821, the Crown outlawed all monies except its own. So that's how it came to an end. But for nearly 50 years, private currency was circulating in Great Britain. Now, the reason in the title that I use the somewhat clickbait reference to Bitcoin is because it kind of made me think about Bitcoin. Now, let me be careful here, because as I was searching around, I found an academic paper explaining how Bitcoin is should not be compared to token money like this. And he made various, well, actually kind of points. But I mean it in a loose sense here. I mean, obviously, these privately issued tokens didn't have the control of the supply of them that Bitcoin has. They weren't, and maybe some other important key aspects of why Bitcoin is exciting weren't true of these. Having said that, it's private currency, and Bitcoin is private, right? It's not a state. So that's interesting. There's also this convertibility, right? The tokens were supposedly convertible to, you know, official money. And also, at least until they stop us, you can buy Bitcoin and then you can turn it into the fiat currency or fiat money that your government unfortunately forces you to deal with. So we can sell Bitcoin turned into US dollars, for example, or Japanese yen or whatever around the world. So I only mean it in that sense, that the private currency of this period is similar to Bitcoin in those respects. So I just think this is an amazing episode. And I'm just trying to remember, was there something else I wanted to highlight about it? They're big collector items. Here's just got to show you a little bit more. It's kind of fun, especially because we had our currency design competition. Can I make this? There we go. Make it nice and big. Playable at Condor's. Yeah, okay, here we go. See, it says payable at Condor's Drapery Warehouse. That means that you take this currency, 1794, you take this private currency to Condor's Drapery Warehouse, and they should be able to give you a copper instead of this. But the reality was there just wasn't enough of the government money. Oh, I'm sorry. There was one other factor in play. There was a lot of counterfeiting going on. There were a lot of counterfeits of the government coins, and the government was not doing a very good job of making their coins difficult to counterfeit. So one of the things you can kind of see in this picture, but I think I can show you something better. They did this thing on the edges, which we're now familiar with, right? Things on the edges that made it harder to produce these coins and therefore harder to counterfeit. They have one where they actually show you the side. I thought, oh, great. I'm not finding it here. Oh, there it is. There it is. That's what I want. Okay, so in this one, which is struck in 1794, 1795 for Christopher Emerson, the proprietor of the George and Blue Boar hostelry in High Holborn in the West End of London. They called this the Blue Boar. That was called the Blue Boar, that place. And let's see, can I make it bigger? Yeah. So here you can see one side of the coin, nice art on that, St. George and a dragon. And then you can see the payable. We're seeing the edge of the coin here, payable at the blah, blah, blah of London. So that payable note is actually around the edges of the coin. I gather that was difficult to do back in 1794. And so in a way, you could be sort of technologically ahead of the counterfeiters by putting things on the edges that were going to be difficult for the counterfeiters to do, or more expensive than it would be worth it. And so go ahead.
Sorry, not to interrupt, but this was also done because people used to take clippings of coins. So they would clip the edge off a coin, and then they would take a bunch of these clippings and melt it down and create a new counterfeited coin. So, it also stopped with that.
Yep. Right. So that's, I think, why George or Professor Selgen titled his book Good Money, because it was good in the sense of meeting a need the market had. They needed more small coins to function with all these new industrial workers and the who wanted to buy things, and there were things to buy now for the masses, right? All the implications of the Industrial Revolution were leading towards the need for more exchanges in the market at small denominations. So there was that market need, and also the government wasn't doing a good job with its money, and there were a lot of counterfeits. So a lot of the money in circulation was counterfeit money. So that's not good. So it was good in that sense that they actually, these innovative private currency producers were making money that was difficult to counterfeit. So that was a big improvement there. Okay, anyway, I just thought that was an amazing story and something to think about and know about a little bit. And let me make sure that I grab that link to share of his book. What am I looking for? There we go. Grab that link, turn off that, and share that in the chat. Okay, and there's a link to Professor Selgen's book, Good Money. Okay, I think we've reached the end of our planned stuff, and we've gone a little bit longer than Econ Mini is meant to go, but that's okay. Let's see if there's any last super chats. I think we caught them actually, and wrap up. So let's see. There's my super chats.
If you have no super chats waiting, I'd like to make an announcement.
I think we covered all of that. Oh yeah, we do have some fun news to share in a cagey way. What announcement do you have in mind?
Well, a couple. Firstly, guys, we are still working on going to alternatives from YouTube. So please, we're all working on it. We're doing it. So don't worry. We're probably going to go on Rumble, Library. We're not going to do DLive because DLive has shown that it is a part of this paused gang. So we're not going to go with them. If you have any others that you'd like to throw our way, yes, Entropy. Yes, we are doing Entropy. Don't worry. So if you have any others you want to throw our way, alternatives, please let us know. Secondly, we are also going to be looking at alternatives to Discord.
Yes.
There's been a lot of movement in our community to new platform. We won't reveal what that is yet, in case we don't want to cause a mass
Bring attention
exodus.
to
But
it.
if you
Yeah.
exactly, we have a new platform set up for the deep lore and unpopular academy side. Brad and myself, after this, will be having a discussion about whether we want to set up our own community on there or whether we want to look to another alternative. So don't worry, we do have things planned. We do have things
Yep.
in motion. Finally, and the big news. Sorry, two more. The big news. The next design competition. I have come up with the next design competition.
Oh, okay.
The next design competition will be to design a flag for a private city. Now, specifically, a private city, not a private country, state, not anything like that, a private city. So you need to keep that in mind. The next competition will be for a flag for a private city. Now, it could be whatever city you want. It could be located wherever you want. If you want a flag that's kind of more Eastern European in style because the city is in Eastern Europe, you can do that, or South America or whatever. But it has to be a flag for a private city. Finally, now we are onto the final announcement. We have merch coming.
Oh, okay. I had something else. I have one more after you.
Oh, you have one more?
Yeah, you're working on some T-shirt designs, and I need to work with you on that. Well, designs that can be used on a variety of merchandise, right? Once you come up with your design, then they're able to put it on mugs and so on and so forth. But yeah, we're working on some designs for the show.
Yes, and we have a new logo. Hopefully, that you saw that logo, Redlip. Hopefully on Discord that I sent you.
Oh,
that's
with RL.
Yes. Yeah. Do you want to share that? Because I think that's pretty cool to share. There's a bit of a teaser, bit of a keep them warmed up.
Let's see.
We have a new logo I've designed.
I'll share that.
We have some Moon King designs. We have some so to speak designs. So we have a lot of stuff on the way. So
I've got the RL
big happenings.
I've got the RL logo up there.
Yes, I can't see the chat, so you're gonna have to show me what the reaction is.
Right.
Yes, we have stuff on the way. Please keep up to date. Please be ready to firstly move over from YouTube to an alternative. Secondly, to move over from Discord when we do to an alternative. Right. And when the merch comes out, be ready to get your checkbooks ready because I think they're pretty good designs. I've worked fairly hard on these ones, tried to make them a bit professional. So,
cool.
That's all on my end.
Okay, yeah, and then I just wanted to mention, can't be specific about who or exactly how much, but we have received a rather nice Bitcoin donation. And the intention of it was twofold. One is to support the show. And two is to give Mad Mercenary and I a little bit of skin in the game, right? And without saying the amount, let's just say that we have skin in the Bitcoin game now. So the fate of Bitcoin becomes much more interesting to us at this point. So anyway, thanks to that person. He Mad Merc and I know who it is, but well, we know their screen name, right? I mean, we don't know who it is, but they didn't want to have that shared with everyone. So thanks very much for that donation. And it's an important signal to me when there's things like that, because there's many ways to measure the success of what we're doing here. One is to look at subscribers on YouTube, view counts, feedback, just people saying, hey, I love your show, I recommend it to people. All of those sorts of things are important feedback to know that we're on the right trail here. Thank you, Hussein. He says, I'll be happy to donate to your public wallet addresses. Thanks. Yeah, that's always an option. But another indicator is financial support. That tells us also that that's revealed preference, right? It's even stronger in a way than somebody giving us some nice words. It's saying, hey, I could have spent this Bitcoin or this money on something else, but I gave it to you instead because I really like what you guys are doing. I want you to keep doing it. So all of these signals are things I definitely keep an eye on and really appreciate. And you can support us through Subscribestar or the Bitcoin public address in the show notes. And Bitcoin public address works, by the way, because since setting it up live on the show, that wallet, where one of our guests actually gave us a small amount of Bitcoin to show us how it worked, somebody else has actually submitted another small donation through that. So thanks a lot for that. It's a great way to donate to the show and show your support. Okay, I think that's everything. Wow, pretty packed Econ mini show, nearly well over an hour. So normally we're going to try to keep these a little shorter than that, but of course this was an exciting week, and I was looking forward to talking about the fun. And I didn't even get into all the memes and fun stuff that around this WallStreetBets thing. But please do look. A good place to start is my Radical Lib Twitter account. It's Radical Lib instead of Radical Liberation because Twitter doesn't let you have a username that long or an @ name that long, account name. So if you look at twitter.com/radicallib, you'll see I was highlighting some of the more amusing stuff, some of which really made me laugh. I'll just share the words. I'm clinically retarded. you gotta see the context. Just go look at my Twitter feed to see what I'm talking about. Anyway, just hilarious stuff. People are having way too much fun. So I'm sure someone will come along and try to be the fun destructor. But I don't think that's the way to look at this, by the way. In Academic Agent's analysis of this whole thing, he said, they're going to put a stop to this. Okay, sure. But the point is to keep doing it in different unexpected ways, right? No one expected Trump. No one expected the WallStreetBets and GameStop stuff, right? Just keep coming at them in different directions, right? And every time, what do we learn? What does everybody learn who's paying attention? We learn that the elites are out for themselves. As the great comedian George Carlin put it, they're in a club and we're not in it, right? And all of this is really getting revealed each time these little sort of populist uprisings happen, and you watch how they handle it, and you watch how hypocritical they are, and how much it's not a fair game, and and it's all rigged. That's our theme word, right? It's all rigged. Thanks to Hussein again for a super stick. I didn't know about this super sticker thing, but it's a super sticker. You can see it in the chat right now. Thanks for being you, it says. Thank you. Very kind.
Yes, and
yeah.
One more thing. We are going to be looking at, when we move over to these new platforms, especially for Entropy, so please keep this in mind. Donating, if you want a super chat read, when we set these new platforms up, donate through there. Because every time you do a super chat, we give money to Susan as well as us. So we want to limit that. We want to limit the amount of money we give to big tech. So
right.
we're going to be doing.
We'll work on that.
We're going to work on that. We're going to work on that indeed. All right. And
okay.
The club is rigged, and on this program we hate riggers. So
that's right.
Just keep that in mind.
All right. Okay. Thanks, everybody. Talk to you next week with our own Miki the Fourth, who will be teaching us about Czechia and what happens after communism ends. At least what happened in his country after communism ended, and it will be quite interesting. I promise. I know more than I'm revealing. It's going to be awesome. Okay. Bye, everybody.
Bye-bye.